like you guys have said, if they revalue it to 5,000,
Yeah, it's over. It's over.
things will go.
They're not gonna. They won't
Even
do
if,
it.
yeah,
I think they've got no choice.
yeah, because
They have to do something about the debt by revaluing gold to a different level and carrying out a few financial tricks. They can generate several $1 trillion out of thin air, which will reduce the debt at least temporarily until they spend it
yeah.
again. And it's kind of like kicking the can down the road, but at least it will keep things in check for a couple of years.
Rudy's actually thinks silver could go to 500 now. He called the $50 silver back, well, last year when it was at 36. Then when it traded 50, he called for 100, and now we're at 103. That's where we closed on Friday.
Central banks may be forced to execute a financial trick of historic proportions, revaluing gold reserves to $5,000 per ounce to solventize a drowning global economy. This accounting maneuver would instantly generate trillions of dollars in nominal book profits, allowing governments to write down sovereign debt without immediate austerity. Technically, MarioInnecco, host of the Innecco 64 channel, and Clive Thompson, a retired wealth manager, argue that authorities have no choice left but to play this card. They explain that while this strategy creates money out of thin air to reduce debt ratios, it is ultimately just kicking the can down the road. Amidst this chaos, they highlight the prescient forecasts of analyst Rudy, who correctly called silver's move to $50 and $100. With silver now trading above $103, his latest projection targets $500, suggesting the metal's upside potential is expanding as the scope of the debt crisis widens. This accounting sleight of hand serves as a reprieve, effectively printing equity to balance the books without addressing the root cause of spiraling deficits. However, this move signals to the market that aggressive currency debasement is the only remaining policy tool, acting as a powerful catalyst for tangible assets. As the illusion of fiscal responsibility fades, investors are front-running the inevitable inflation, driving precious metals toward valuations that reflect their actual utility as the only honest collateral in a bankrupt system. Now, we present the clips from MarioInnecco and Clive Thompson's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Rudy's actually thinks silver could go to 500 now. He called the $50 silver back, well, last year when it was at 36. Then when it traded 50, he called for 100, and now we're at 103. That's where we closed on Friday. I heard that it's more for the constitutional silver coins because it's got copper. It takes longer to refine, so they don't want to be exposed to having that silver that long. But the normal silver, bullion silver coins, no one's really, they're not really holding that. They want that, the refiners. I think it's more the 90% silver. But anyway, there's another. Should we answer that question? Do you guys want to answer about if you're going to swap
Yeah.
silver for gold or vice
The
versa?
I think that the trick is to have bought the right amount of gold and the right amount of silver up front, so you don't need to switch from one to the other. And as Phil said, if it's, I mean, I'm not buying for a profit, I'm buying as a parachute, as a safety measure. But if the time comes where you want to do something with it, obviously, if you could get the right price silver for a house, well, why not?
About the dollar, Clive, the dollar index seems to be, yeah, holding just above like a trend line that's been running since 2008 when it hit a low of 70.69. It's at 97.46. So yeah, it looks like we could have another leg down. But back when it hit 70, gold was at $1,000, and now we're at 100 almost in the dollar index, and gold is at 5,000 almost. So longer term, you got to be out of all the fiat currencies. It's just
Yeah.
that Clive was talking about the dollar before, but yeah,
Yeah.
anyone can answer if they want that.
I mean, I think the dollar is probably going to head lower this year. I don't see foreign nations deciding to massively increase the dollar exposure in their central bank holdings. But I see the amount of dollars coming into existence is going to increase by 2 trillion this year. Basically, government debt getting bigger by that amount, which means the government gets poorer. Someone gets that 2 trillion. I don't think it's going to be foreigners who are going to be buying it. So basically, more dollars means lower dollar.
Let's say Saudi Arabia has a surplus of a ton of gold at the end of the year with China. That's why they're building all these, like the Shanghai Gold Exchange. That's why they're building all these vaults, like in Riyadh and elsewhere. So the Chinese gold, the 1 ton, will move to the Saudi account. It's being done by countries. That's what I'm trying to say.
I get it, but the people within those
I
countries
know.
have to take
I wish
notes. Yeah.
maybe eventually it will. If I think these people don't realize that the fiat currencies are collapsing, and maybe by default we will go back, from the bottom up. In the States, a lot of states are, Florida, case in point, they've passed laws to make gold and silver like legal tender, right? The other thing that's happening to silver, on the other hand, is that at $20 or $30, central banks couldn't care less about having silver as a reserve. But now at 100 or and maybe potentially 200, I think we're going to start seeing central banks hold silver too. And as for that chart of the Weimar, I agree with you. Technical analysis, yeah, it's going to be different now. But you can still have that chart of the Weimar. You could turn it around, turn it upside down. That's just a currency collapsing. And I think that's what gold and silver are telling us. And I mean, I'm happy I've been on this trade, so to speak, since 2002 because, I don't have to worry about buying it here. And I think a lot of people are not going to buy because they think it's too high and
I think
they're gonna be left holding the bag.
Mario, a couple of years ago on your channel, we were talking about how we can tell when the end of fiat currencies is getting near. You may remember I said I think we're at 5 minutes to midnight, and the symptom of being just at the end of the fiat system that we're currently in, we said would be when we start to go into a sort of melt up when asset prices like shares, equities, gold, those sort of things start to rise parabolically. Well, I think we could well be in that
Yeah.
phase where we're starting to see this melt up. I mean, literally, it looks
Yeah.
like it's happening to me right now.
And it's very deceiving because you've got the Dow around 50,000, and most people out there think that's great, but they don't realize that the Dow Gold ratio just broke through some really key technical levels and it's below 10 for the first time in years.
Logistical bottlenecks in refining 90% constitutional silver are becoming apparent, but these physical market frictions are merely symptoms of a broader monetary shift. The global economy appears to be entering a melt-up phase, a classic indicator of the final stages of a fiat currency's life cycle, where asset prices rise parabolically. While the Dow Jones Industrial Average has nominally surged to 50,000, this growth is deceptive. The Dow-to-gold ratio has decisively broken below 10, signaling that real value is rapidly shifting from equities to hard assets. As the dollar index threatens another leg down amidst a $2 trillion expansion in government debt, the role of silver is being re-evaluated. With prices breaching triple digits, central banks, previously indifferent to the metal, may be compelled to accumulate silver as a strategic reserve asset, validating the strategy of holding a diversified precious metals portfolio as an insurance parachute rather than a speculative trade. Let's get back to the interview.
I just wanted to show two charts that I've been looking at for the last few years because they look so similar. And it's one of the reasons why I think we are going into this currency collapse. And it's the comparing the Reichsmark in the 1920s to the dollar now, and it's just it looks so similar, and it just keeps the dollar chart just looks like there's still a lot of room. Well, and the dollar chart is over more years. It's like a bigger fractal. So the only thing we have going for us, for people who haven't gotten a hold of any gold and silver yet is that I think you still got a window of opportunity. But in Germany, I think it was in the summer of 1922 when it really started taking off, the price of gold. You only had you only had up until here to get yourself out of Reichsmarks. And then it was I mean, it was so fast. And it's got nothing to do with technicals. I think it's just the complete loss of faith and confidence in everything. So what I'm trying to say here, there might still be a bit of time. I don't know how you guys feel about it.
Well, first of all, everybody should have some gold and silver in a place where they can get to it quickly and easily, and they don't need to ask anybody else's permission to lay their hands on it. But beyond a certain point, there are security issues and there are cost issues with having too much. So it depends on your motivation. If your motivation is to have a parachute or a level of protection, then you need the stuff close to you where you can get it. But if, on the other hand, you're planning to speculate on it because you're, let's say, a multi-millionaire and you've got hundreds of millions, well, you can't keep hundreds of millions under your pillow. You have to use paper silver, and then all you've got to hope for is that you can speculate into something, whatever it will be, when everything starts to fall apart.
David Bateman, who's a billionaire, he's got a lot of silver. He sold a software company that was involved in real estate a few years ago, and he did really well. And 18 months ago, he bought loads of silver from Comex, and he took delivery. I think 500 million or something. He's doing very well with it, and gold. Clive, do you think the Swiss banks will will be safe? Because you never know. Even in Switzerland, things could get.
Well, first of all, Switzerland is very much towing the line of the USA and Europe anyway. So what goes in the rest of the world will probably go in Switzerland. I'm seeing evidence of that where there's a Swiss lady who has been sanctioned. Not big. Well, they say in France when they got her sanctioned, they said she was a friend of Putin, but she's nothing to do with that. But her real crime was going on YouTube and making some criticisms of France's policy in Africa. So, because of those sanctions, the Swiss banks have been forced to shut her accounts. So they've sent her Swiss francs to the post office. The post office can't have any foreign currencies apart from Swiss francs. The euros and dollars she had have all been frozen by the bank. She can't get them at all. She can't get on a plane. She can't travel into Europe. She can't get paid by Google for her YouTube channel anymore. She's basically frozen out of the system. She can't even pay her landlord because her landlord banks in a Swiss bank, and the bank won't take money from a sanctioned person. And this lady has got absolutely nothing to do with Russia whatsoever.
Is it a lady or I
It's a
thought it was
lady,
a
yeah,
guy.
yeah,
Yeah, yeah.
yeah. Well, there's about 12 people who've been sanctioned for
All right.
various they've been called friends of Russia, but even though they got none of them got anything to do with Russia.
The thing is, yeah, maybe there is a discovery there. You know, they've done all the drilling and they think but it could take 20, 30 years to actually get to the gold. And the thing about gold is that it's got the highest stock to flow ratio. So there's 70 years almost of gold production overground. So when you find a lot of gold, it doesn't really impact too much the supply and demand of gold. It's more fear of the financial system that, or lack of thereof, that influences the gold price. During the California gold rush, there wasn't much inflation at all, except in California, in the region where they found the gold. So I think this is rubbish. You should ignore these stories.
The other thing to say about that, Mario, is that even if this gold is down there, the depth at which they claim to have found it is something like 3 or 4 kilometers down, and the temperature down there is hot enough to melt the machines that would be digging it up. No human being could possibly go down there.
And it could probably cost more than the price of gold right now to take an ounce out of the ground. So that's the other. The real move in gold started after August 22nd, 2025 speech at Powell's speech at Jackson Hole. It seems banks went long after the speech or something broke. Actually, I don't agree with that. I'm going to show you why. I think it was in here. Let me bring the chart. I think it was here, and this was in 2024 when we broke this line. But I can see what you mean. I think it was here that you're talking about. But it had already started breaking out. So I kind of half agree with you. Oh yeah, and I wanted to show you guys this. This looks like usually when the market goes up, you get a falling wedge, right? But here we got a rising wedge, which is very bullish, and we've broken out of it. And you usually measure the difference from here to here to get the objective. And in percentage terms, it's 469% that we move the distance here. And I calculated from 2,700, which is pretty much the level here. And I'll tell you, the objective of this breakout would be $15,400. And some people might think that's not enough, but it could be just the first move, and then we could have a correction back down to 10 and then back up to 30. I don't know.
15,000 puts us at maybe 35-40% backing of the Fed's liabilities.
Which is historically what central banks used under gold standards, right? Like you guys have said, if they revalue it to 5,000,
Yeah, it's over. It's over.
Things will go.
They're not
Even
gonna. They won't do it.
Yeah,
I think they've got no choice.
yeah,
They
because
have to do something about the debt. By revaluing gold to a different level and carrying out a few financial tricks, they can generate several $1 trillion out of thin air, which will reduce the debt, at least temporarily, until they spend it again. And it's kind of like kicking the can down the road. But at least it will keep things in check for a couple of years.
The frightening alignment between the 1920s Reichsmark and the current US dollar chart suggests a fractal repetition of hyperinflationary collapse is underway. While a narrowing window of opportunity to exit fiat remains, traditional offshore havens like Switzerland have become treacherous. The aggressive freezing of accounts for political dissent proves that banking neutrality is dead. In this environment, relying on paper claims or third-party vaults introduces existential counterparty risk, forcing investors to seek assets with zero liability attached. Simultaneously, attempts to dilute the bull case with rumors of massive deep earth gold discoveries are being dismissed by experts, citing the physical impossibility of mining at temperatures that melt equipment. With the supply narrative debunked, technical indicators have formed a massive rising wedge, a bullish breakout pattern pointing toward a long-term target of $15,400 per ounce. This valuation is not arbitrary speculation, but a return to historical solvency standards. A price of $15,400 is required merely to back 40% of the Federal Reserve's current liabilities with physical metal. As the system runs out of financial tricks, this repricing becomes the mathematical inevitability needed to balance the global ledger. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.